Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the H2 and FY26 post-earnings conference call of Shree Refrigerations Ltd. Today on the call from the management team we have with us Mr. Ravalnath Gopinath Shinde, Chairman and Managing Director, Commodore Sunil Kaushik, NM VSM retired, whole-time Director, Mr. Abhijit Saoji, Chief Executive Officer, and Mr. Manoj Kothale, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to briefly run us through the investor presentation with business and performance highlights for the period ended March 2026, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Thank you, Vinayji. My name is Abhijit Saoji, and good afternoon to everyone, and welcome to this earning call. Let me walk you through the operational and financial result of Shree Refrigerations Limited. In Shree Refrigerations Limited, we say we don't manufacture products, we manufacture pride, and we definitely manufacture the pride for this country. Okay, before getting into the operational result of this company, let me bring in few highlights, a few financial highlights. All of you are probably well versed about the financial result of this company. But in short, in a whole year basis, we have increased our turnover by around 50+%. Our PAT is up by 64% on YOY basis. And the most important, despite of a dilution of a stake and number of shares going up, our EPS is up as compared to last year's by 28%. Detail of it, why it has happened, how it has happened, let's go through the presentation. Okay, let's look at the operational part of it. The financial part will be taken care by my colleague, Mr. Manoj Kothale. Okay, we are known in the refrigeration world as a 30-odd-year-old company manufacturing most of the taste equipment for other refrigeration companies. But since last 10 odd years, we are known as a leading defense or premier defense HVAC supplier and manufacturer of the systems. We are today a 350 odd strong team. We have offices across 8 locations in India, mostly towards the coastline. And we do have a 3+3 odd certification from Naval Fraternity. Now, what is this 3 certificate and what is the importance of this 3? I will cover in my subsequent slides. But this is the most important part of the presentation also. What drives us? What are our mission and vision? We would like to build this nation, very strong nation with the indigenous product and cooling and robust cooling solutions. Our missions are very clear, provide a reliable and high quality product for our defense and engineering sectors. The classic example of this vision and mission is we are the only Indian firm which has indigenized the whole submarine HVAC system. What are our journey over 30 odd years? I will not take you individually, but in 2016-17 is where we entered into a defense segment or mostly in naval segment. Since then, we have delivered most critical and newer technology to an Indian naval segment, namely indigenizing of the submarine or Scorpion air conditioning system, introducing first time an oil-free compressor based chiller solution to the Indian Navy. And 2025, you all of us are aware that we have been listed on the BSE, and that's the reason we are interacting with each other. And thank you for the trust shown in us. Okay, what are our core business identity? As I said, okay, let's look at what are those 3 out of 3 registration. If you look at the last line of this slide, we are the only company in an HVAC segment in India which can manufacture or which are allowed to manufacture and supply HVAC system, AC and ref plant, as well as our own control panel. Most of my friends in this industry either can supply HVAC system or can they only supply only AC and ref plant. Some of them or few of them can supply both HVAC and AC plant, but they have to buy a control panel from someone else. We are the only firm which can manufacture, which are allowed to supply, manufacture, and install, commission all these three segmentation. Where does our revenue come from? Our revenue come from all these four streams. That is equipment or system supply for new and retrofit. New means a new shipbuilding. Retrofit is an existing ship which is coming into refit. Obviously, spares, that's a major revenue stream. Installation, commissioning, and AMC and life cycle. What are the product range we are talking about? Our flagship product is an AC plant. This is what we started with. HVAC has been added 3 years back. Electrical panel has been we have been doing it from day one. Now, from an AC plant point of view, I will not get into a technical part of the story of what is the capacity and all that. But let's say from a revenue point of view, there are 6 AC plant capacity standardized by Navy. Today, 4 of those capacities are already type tested by us. Now, what is meant by type tested? Once you test that product as per the naval or a defense grade, when the order gets repeated for that product for any other ship, we don't have to do the type testing again. So 4 AC plant is already type tested, 4 AC plant capacity is already type tested. In case of HVAC, which consists of quite a few of a product, let's say to name it, if I had to take 3 or 4 major components, the ATUs, again 6 capacities are defined by Navy. We have already type tested all 6. AFU, that is air filtration unit or nuclear, biological, chemical warfare filtration plant. We already type tested all the capacity. Ventilation fan, the number of capacities are quite high. Most of the thing, let's say on a percentage terms, we are already type tested 70% of it. So we are one of the firm which has almost all the capacities, all the products are type tested, and which has a distinct advantage going forward for us. What are the projects which we are currently doing and what are the projects which we have completed? I will not again get into the name of this project, but if you look at it, P-17 Alpha and Nilgiri class ships, that's 4th line on the left hand side of the column. That's most prestigious, what do you call it as frigate. Frigate, which has been dedicated to a nation by our Prime Minister. We already supplied our oil-free compressor-based chiller to this project. This project is completed, done, dusted. Scorpion is again the first one which we have indigenized, is already here. All this completed project will bring us a lot of revenue on our spares and services going forward. What is our ongoing project as of today? We have 8 ongoing projects, out of which 4 will be completed in this financial year. This means FY27. Others will continue for next financial year also. Obviously, 8 project means that much of team is required to handle, and you can see in 10 years we have done completed 8 odd project, and currently we are doing 8 project ongoing project. That means our market share today is very high. As of today, we are holding 64+% market share in the market. To complete this project, to produce this project, you need to have a state-of-art manufacturing facility. What kind of manufacturing facility we have? We already have originally a 20,000 square feet of a plant 1, which will get converted into mostly now an assembly plant and a testing facility. Currently, we are running a leased unit, which will be closed in the month of June, because our 50,000 own expansion will undergo a commercial production from the month of June onward, and lease facility will be closed. This put together will give us something about 70,000 square feet of a manufacturing facility with all state-of-art machinery in-house. It's completely backwardly integrated manufacturing facility. We hardly had to now find a dedicated sub vendor for us to do a small job also. Oh, important thing, this facility is certified by ISO, obviously, Z Gold, that is zero defect, and IRS, that is Indian Register of Shipping. Okay, anyone who's talking about defense has to have a state-of-art testing facility. These are the testing facility. Today, I am proud to announce a controlled ambient AC test room for an ATU. We are the first company on the block who's created this facility, which has been made available for Navy to test their HVAC system or indoor system. Bottom two are the AC plant and wet plant testing facility. Obviously, the corner one where you have seen the product getting tilted because the ship motion has to be imitated in the testing facility. The product has to work when the ship is tilting. The same way, in case of submarine, the tilting goes up to 45 degrees centigrade. 45 degrees, not centigrade, sorry. Okay. Now, to support this kind of a product in the market and to support our customer, esteemed customer, we have a branch office across the coast. We will open a new office in this financial year in Kochi also. So east side we have a Visakhapatnam and Kolkata. South we have a Chennai. We may have a Kochi this year. West side we have a Goa, Mumbai and Pune. And obviously Delhi being an epicenter of all this defense, we have a sales office in Delhi. What are the certificate and registration? The first three are the three one which we are talking about, coming from marine engineering, coming from electrical engineering, and coming from naval architecture, taking care of all the segment. We already see IRS, all certifications are available. What is our market outlook? We said that we are already an active and we are a market leader in a defense and HVAC system. We are trying to what you call as trying to get ourselves established into a data center market. Do I need to explain you a tailwind about it? Because all of us are reading a newspaper, all of us are reading a news and hearing a news. Both this segment has a huge tailwind. I will not dwell a lot on this slide. Let's look at it in terms of number. How big is this market? Probably data center and marine market put together is huge. But if I look at it, only a defense HVAC system market. Instead of me, giving you a what do you call it, explaining you this slide, let me ask my colleague Commodore Kaushik here to come in and to explain the slide in much better fashion.
Okay, so when we look at our business opportunity, what is it that what is that we are looking at? We've already established ourselves in the defense marine ecosystem. Actually, if you look at the marine ecosystem, you can bifurcate it into defense applications and non-defense applications. Non-defense applications essentially being the merchant marine. Merchant marine so far had not had too much of a growth. There was not much of traction. But as everybody knows, that there is a very, very strong thrust by the government now to make our merchant marine shipbuilding capability to ramp it from the present low down position to come up to the top 10 by 2035 and top 5, top 3 shipbuilding nations by 2047. That means that there is a huge amount of shipbuilding activity that is going to happen from now right through for the next 2 decades. That is in the merchant marine space. If we look at the first slide and we look at what is our defense, which is our core business, what is our opportunity? The Navy today is at about 150 ships. We're looking at ramping it up to become a 230 odd ship Navy over the next 5 odd years, 5 to 7 years. So there is a plan in place and proposals are being put to the government and government approvals are coming through. As of today, we've got upwards of 2.3 lakhs, 2.4 lakh crores worth of AONs for the government, which will translate into orders over the next 2 years. When we say that that's going to be our, that's going to translate into orders, what is our, scope of that? How much is our scope? Well, roughly put, our market share in that for all the players in this particular field is about roughly 1%. When you see AC, ref and HVAC, it's about 1% the cost of the project. So you can make out 2.3, 2.4 lakh crores. 1% of that is close to 2,500 crores. If you add on to that the non-defense ecosystem, that's about 2 lakh crores. So that's about another 500 odd crores market cap, right? So we're looking at roughly about 3,000, 3,500 crore TAM over the next 2 years. And there are 3 or 4 major players. And if we, conservatively say that everybody gets an equal share, that means our share of the pie from a 3,000, 4,000 crore market will roughly become divide by 4 if we take it as 4 players. But the fact, and when we take that, we capture about 25% of the market. But the fact is that we capture around 60 to 70% of the market. So we've got a huge, huge market opportunity. Next slide, please. As we continue looking at the marine environment, we also decided as part of a strategic expansion that we should look at something which will leverage our core strengths on the land-based applications. And we thought that data center applications is something that we completely fit the bill in. So we've got a strategic partnership or strategic tie-up with our partners, Smart DT, for being the channel partners for providing data center cooling solutions. Well, I don't think I need to speak much about the potential of data center to this esteemed audience. I think everybody is extremely knowledgeable about what kind of growth data centers offers us in the next few years up to 2035 and beyond. It's very difficult to put a finger on what numbers it's going to translate into, but I think suffice to say that it is an extremely, extremely huge market potential. And as far as we are concerned, whatever the technology for data center cooling is, whether it's air cooling, whether it's water cooling, whether it's direct to chip, whether it is immersion cooling, whatever technology is going to be there, you always need a chiller to chill either the air or the secondary coolant. So you are always going to have an opportunity in the chiller market. So we feel that we are extremely bullish as we go forward, considering the market opportunities that we have.
Thank you, sir. Thank you so much. And as Dr. Kaushik has just rightly mentioned, ultimately a technology which we are using in a defense cooling system is the same technology which is probably getting used across the globe for a data center. And same way we have done a tie with the Smart DT, which is again an oil-free compressor-based chiller, #1 player in the world. So that is the same technology which we would like to apply in a data center in India, which has a distinct advantage of power saving, easy startup. Okay, let me not get into a technical sales here. Okay, what is way forward? We looked at a TAM, we looked at a very high TAM. What is our future outlook? We are still saying that we will continue to grow 40% CAGR rate for 3 to 5 years easily without much of issues.
Okay, we see some participants raised hands. We'll take questions at the end of the presentations if it's okay with everybody.
Yeah, sir. That's okay.
Thank
They
you.
just
Thank you.
Okay, let's look at financials, and the better person for is Mr. Manoj Kothale.
Thank you, sir. So FY26, we started with the 215 crores of the orders in hand. Large part of those orders has been received in the last quarter. So initially when we receive the orders, we need to take the design approval required to do the type testing of various kinds. So during the first half, we did all these type testing approvals, design approvals. We also build our team, increase our capacity in terms of machineries, hired a new facility at Wagheri. So revenue was muted in the first half, mainly on account of these activities, plus the deliveries has been scheduled in the second half as per the customer requirement. So once we have done our capacity building exercise in the second half, our revenue has been exceeded by at 100% rate on year-on-year basis and half-yearly basis. With the higher execution, we have been able to generate a higher EBITDA margin of 26.3% in the second half. And as guided in the first half earning call, we have achieved the EBITDA margin of 22%. During this period, we continuously worked on the reducing the working capital days, which has successfully came down from 570 days to 370 days. Next slide, please. So these are the detailed figures. As I explained, our revenue has been increased from 50 crores to 100 crores in the second half. During this time, our employee cost and other expense remain at the same level. So this benefit of operating due to this benefit of operating leverage, our revenue, our EBITDA margin has increased from 11% in the first half to 26%. With the increased availability of funds from IPO and availability of funds due to recoveries, we have been able to generate higher interest income in the second half. Plus, we reduced the utilization of CC during the second half. We also paid off some high cost debts. This has helped us to save on interest costs, which has come down to 2.3 crores to 1.3 crores in the second half. All these activities have helped us to increase our profit from 2.9% to 19.3% in the second half. Overall, at blended level for the financial year FY26, our PAT margin has been gone up from 13% to 14%. Next slide, please. This is our financial performance over the past 4 years. Our revenue has been growing at 45% CAGR every year. Our EBITDA has grown at 40% CAGR and our PAT has grown at 85% CAGR over the past 4 years. EBITDA margin has been moderated this year, mainly account of service and spares revenue has came down to 7%, which was last year at 30% of the total revenue. Going forward, we expect that spares and service revenue will be incorporating 15% of the total revenue. This will help us to increase the EBITDA margin in upcoming period. So this is the financial statement over the annual income statement over the past 4 years. Our revenue, we can see that increased from 50 crores to 153 crores. We have been building our team over the past 4 years continuously, looking at our orders in hand and upcoming orders plus the market available. So our employee cost has been gone up from 7 crores to 21 crores over the past 4 years. Going forward, we looked at as a new hiring will be at a very moderate level and employee cost increase in employee cost will not be as much as increase in revenue. Samely for other expenses, our other expenses were under control over the past 3 years from 23 to 25. This year it has been increased mainly account of new orders that we have received. Various type testing and approval activities has resulted in a higher other expenses. Going forward, we expect that other expenses will not increase at the rate the revenue is expected to increase. Further, from other income side, as I said, we have been able to generate higher income due to increased liquidity. On the interest side, also we have been able to save some interest cost due to lower utilization of CC. Plus, we have reduced some high cost debt. In the nutshell, our net profit has been increased from 13 crores to 21 crores, as has been guided in the earning call of first half. During this year, we have done an IPO of 95 crores of fresh issue. With the fresh issue also, we have been able to increase the report EPS from 5 rupees per share to 6.47 rupees per share. Next slide. Coming to the balance sheet, our net worth has increased from 118 to 219 crores, mainly on account of IPO that has been done, plus PAT that has been generated from this year's activities. Non-current liabilities, we reduced the high cost debts. This has resulted in the reduction in non-current liabilities. From the asset side, as I said, we have installed some machineries. We undertook the Hanbarwadi expansion. This can be seen in a capital WIP, which will be up and running in the month of June. On the current assets and current liabilities, we are continuously working on reducing working capital cycle days. Total receivable days were 350 days last year. It has come down to 250 days. A massive reduction in receivable days. Inventory days also came down from 250 days to 230 days. Net working capital, as we can see that it has come down to overall 570 days to 370 days. Next slide, please. So even though we deliver the 150% revenue growth in this financial year, we still have 1.8 times of the revenue in our closing order book. We have 270 crores of the order book in our hand. If we analyze, large chunk of this order is in HVAC, AC plant and refrigeration plants. The money required for execution of these orders plus capacity required, factory required and team required is already in place. and we are very confident that we will achieve the guidance that has been given by our CEO. With this positive note, I would like to start to taking your questions. Thank you.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. If you are not able to use the option of raise hand, you can post your question in the Q&A section as well. So the first question we will take from the line of Mr. Agastya Dave. Mr. Agastya, you can unmute and go ahead, please.
Hello, am I audible?
Very much, sir. Yeah, go ahead.
Thank you for the opportunity, sir. Congratulations on great set of numbers. Sir, I also apologize if me raising my hand distracted you during the presentation. I'm really, really sorry. That was not my intention.
Not at
I
all,
apologize,
Agastya,
sir.
don't worry. Not at all.
No worry, no worry.
Not at all. We just wanted to make sure we didn't miss anybody who raised their hand. That's all.
Still, sir, I must apologize. I did interrupt your flow.
Which is
Sir,
perfectly alright, sir.
thank you, sir. Sir, you in the commentary that you provided on the P&L as to how various line items will change going forward as you scale up. So can you also provide a little bit more commentary on what you expect on the capex side for the next 4-5 years? Like, would you require some additional capex or completely different machinery for the data center opportunity? And when do you see the commercial revenues start kicking in for the data center? That's my first question.
Okay. Shall I answer you the first question, or you would like to continue with the second question?
So then I'll finish my questions. The second question is on the capital efficiency of the business. So when do you see? Again, sir, you gave a hint on what kind of capacities you have in place and what can be executed. The current order book can be executed based on what you have in place. Is that the maximum, like the peak revenue potential of your existing fixed assets, or can you go higher? I mean, what is the peak revenue potential of the asset? And third, a small question. There's a lot of inflation on the metal side, and I would believe that you would require a lot of probably copper and other such metals. Are you seeing cost inflation or supply disruptions? Because both are happening. And how are you placed? That's a very near-term question. How are you handling that situation? These are all my questions, sir.
Mr. Dave, if I understood your question, let me repeat. You are asking me, do we need a capex in a short term or long term to do a data center business? One. Second thing, you wanted to know what kind of revenue we expect from a data center. Third is whatever capacity we have built on the manufacturing side of the story, how much revenue or peak revenue I can generate out of that infrastructure. And the last one is the metal inflation, and how do we manage metal inflation? Is that right,
Correct.
sir?
One point, sir, which was missing is on the data center side. What and by when do you see the revenues kicking in?
Okay, let me at least to start with your capex. We don't expect a major capex involvement for next couple of years at least. A
Okay.
major capex involvement. A small capex will always come into
Sure.
play as and when the business will grow. What revenue and when the revenue will start taking it from a data center? See, data center, our tie with the smart data is about 6 months or old, and we are pushing in a new technology in a data center as compared to what is they are using right now. So we expect a reference installation. That is our goal, is to create a reference installation in FY27, and we expect a major revenue coming in from a data center in FY28.
Okay.
What is the peak revenue which we can generate out of our infrastructure? This guidance we already given last time also. We are still saying up to 400 odd crore rupees kind of a revenue we can generate out of existing infrastructure. The metal inflation, yes, metal inflation is affecting everyone. There is no question about it. Whether it is copper, every single metal inflation, and it will also impact us, but not as badly as it is probably impacting others. Very simple reason is we take a project which can run up to 2 to 3 years. And when you are taking that kind of project at a fixed price, you need to do your costing and your own inflation calculation in a better fashion. But metal today is going beyond every inflation calculation. So metal will impact us a little bit.
Great, sir. Thank you very much, sir. Sir, kindly consider quarterly results as soon as possible. I know there will be constraints, but the sooner you guys can move to quarterly reporting, the better. That's the only request, sir. And all the best. Thank you very much for giving me the opportunity.
Thank you so much, sir.
Thank you, Agastya. We'll take the
Agastya,
next question.
can I just amplify a little bit on your quarterly? It's a suggestion well taken, but in our line of business, it might indicate incorrect conclusions to you. So for somebody in our line of business in the defense ecosystem, a half yearly or actually even an annual reporting is more accurate than a quarterly reporting.
So even a small update every quarter. I understand the nature of the business. Your commentary is far more important. Like frequent commentary is far more important than the actual numbers. We will
Noted.
understand the seasonality, sir. We
No,
just need
noted, sir.
inputs from
Noted,
your
sir.
side.
Noted,
Thank you
noted.
very much, sir. Thank you.
We are very happy to hear that the investor community is extremely mature. Thank you.
Thank you.
Thank you, Agastya. We'll take the next question from the line of Achit Reddy. Achit, you can unmute and go ahead, please.
Yeah. Hello, sir. I just want to understand. So in FY26, H1 was very bad and H2 was blockbuster. So I want to understand, will it repeat the same in FY27 or will it change in FY27? Like, can we get equal revenue in both H1 and H2 or how things change now? What is going to happen in FY27?
Achit, thank you for asking this question.
One thing, Achit, before I will just interrupt Abhijit. Agastya, this is exactly the point I was trying to make, in response to your quarterly reporting. But yeah, go ahead.
Achit, coming back to, yes, your observation is perfectly all right. The H1 was really very, very muted and H2 was a blockbuster. Going forward in FY27, we see H1 and H2 may not be as skewed as it was in FY26. There will be a lot of stimulus which will come, H1 and H2, but still an H2 will be a little bigger as compared to H1.
Achit, if I can just amplify a little bit more, you see, our deliveries and therefore the numbers that you see are one of the factors that drive it is the delivery requirements by the shipyards who are our major customers. So even if we want to, for example, make H1 a blockbuster as much as H2, we may be constrained because the delivery collection or the delivery period for a particular shipyard may actually lie in H2 rather than H1. So this skewness is going to be there. It is a factor of the sector that we are in and the business that we are in. But yes, we are trying to see how we can even it out because we do see that the investor community likes to have a more equal kind of a delivery period rather than having any kind of skewness.
Another factor that will influence this number is since we are handling more number of projects in a year, the skewness across projects may dampen the skewness across quarters or halves.
Yes.
Okay. Thank you, sir. That is the only question.
Thank you. We'll take the next question from the line of Deepak Poddar. Deepak, you can unmute and go ahead, please.
Yeah, am I audible?
Yes, sir.
Okay. Thank you very much for this opportunity. Sir, just wanted to understand first up, I mean, in your opening remarks, you did mention that your other expenses will not increase at the same rate as your revenue or top line.
Yes, sir.
So kind of some operating leverage advantage you do expect to get. So what sort of EBITDA range we might look at in terms of margins?
So for next going forward, we expect that our EBITDA margin will remain somewhere between 20 to 24%.
Okay. And this is after considering the impact of commodities that you mentioned will impact us.
Deepak ji, the commodity of the commodity inflation has always been on radar, and we did consider that before making this kind of guidance figure.
Okay. Okay, understood. And my second question is on your TAM. I mean, the 3,000 to 3,500 crores TAM, that is over next 1 year or 2 years that we are looking?
It's 2 years, sir.
Or 2 years.
Two and a
And
half
that
years kind of thing.
2 to 2.5 years. And that
Yeah.
includes both your defense as well as non-defense TAM.
That is only for defense and it's basically for a marine segment.
So both defense and non-defense is included, right?
No, I'll just amplify that. The defense marine ecosystem is 2,500 odd crores. The marine is about, as of now, the demand aggregation, which I will just give you a comparison. When the ministry aggregated the demand in November, that number was around 200. Today, the number is at 434. That's the number of ships that are required by the Ministry of Shipping, for SCI, Dredging Corporation, ONGC, etc., etc. So this number is continuously changing, and there is some projection that it's likely to be about 700. So, but the orders for that is still not starting to fructify. That is why we say it's in about 2 to 2.5 years, because we are expecting about 60 odd tenders to come out this year. That's the expectation from the ministry. So we are just keeping a very conservative number for that, but the defense segment, which is the core business, that's going to be about 2,500 crores, and that's over the next 2 years. Keep in mind that this is for AONs which the government has already given. There are more orders, there are more projects which are in the pipeline, which obviously will get their ONs over a period of time.
Okay, understood. So given this, expectation that we have in terms of tenders, so what sort of order inflow we are targeting for this FY27?
If I understood your question rightly, what you are asking is what is the order book position which may happen in FY27? Is that right, Deepak?
FY27 order inflow, fresh orders that we are expecting.
So please understand, what we see very clearly from a defense segment is approximately 1,000 odd crore rupees worth of tender will be floated. How much we will win and how much we will lose, that will depend. Currently, our market share is 64%.
Okay, 64%. And we have mentioned we have 4 players, right? Generally it is divided between 4 players.
So that's when we look at the non-defense marine segment as well. When you look at the marine segment, of course, like we said, there are 3 distinct products. One is the ref, one is the AC, and one is the HVAC. And you have different number of players in each of these 3 products. But now here's the twist, right? Most of the shipyards now are opting to go for turnkey jobs, right? Earlier, a shipyard used to place individual orders for AC, individual order for HVAC. Now, shipyards are increasingly opting to do turnkey ordering. That means one firm has to provide both the AC and the HVAC. Right. Now, how does that affect us? Well, we manufacture both products, so we are a single point firm to provide both these products. What happens to the market share? What happens to our friends who are also in this segment? Most of them produce one or the other. So you are dependent upon somebody else to become your partner.
So we are at an advantage, right? More advantages. Okay, understood. I think that would be it from my side. I would like to wish you all the best.
Thank you so much, Deepak.
Thank you, Deepak. I would request all the participants to please limit yourself to 2 questions only, since there's a long queue. We'll take the next question from the line of Mr. Deepak Guptani. Deepak, you can unmute and go ahead, please.
Hello, sir. I am Deepak Guptani from Veltron Enterprises Private Limited. It is my pleasure to be a part of this event, and I am giving congratulations for the excellent performance of the company this year. I have 3 questions, and I'm First of all is what will be the total capex for the company's new plant expansion, and how much increment revenue or profit is expected from the new plant. And second one is what is the management growth vision and expected revenue profit for the 2-3 years.
Thank you, Mr. Deepak. Manoj, you can
Thank
take
you, sir.
this.
So total CapEx requirement for phase 1 at Hanbarwadi location is 25 crores. It has been almost most of the CapEx has been done and planned we will be up and running by June. The incremental profit, I would say that this is an extension of our existing facility. The incremental revenue guidance has been already given by CEO, sir, which will be a 20% CAGR rate over the future years. Thank you, sir. And growth vision, I request Shende sir to guide us.
CAGR 40%.
40%. Okay, 40%.
Okay, sir. Thank
Yeah.
you very much.
Thank you, Mr. Deepak. We'll take the next question from the line of Harish Yad. Harish, you can unmute and go ahead, please.
Deepak, before somebody else takes you, thank you for your good words as you asked your question.
Yeah, Harish, you can go ahead with your question.
Audible?
Yes.
Yeah. Good afternoon, sir, and congratulations for the good set of numbers.
Thank you.
And regarding this marine engineering business, you have 60%, 64% share into that. So my question is, what is the product differentiation we are doing, and what is the entry barrier in this sector to us?
That's a good question, Deepakji. Let me answer you one. If you remember, I said about a 3 registration. And a 3 registration, that means we are the only firm in HVAC segmentation which can supply HVAC as well as AC plant or rep plant and as well as make our own control panel. Any of my friend in this segment, either they are allowed to supply AC plant, but when they are supplying AC plant, they had to buy a control panel from someone else, whoever is control panel manufacturer. Some of them are only allowed to supply HVAC. So in that case, they have to buy an AC plant either from me or somebody else. So that is an entry barrier which we have. And as such, for a defense segment, there is just about 4 or 5 odd player into this segmentation. To enter into it, defense themselves has created a lot of entry barrier.
Okay, and let me just add on to what Mr. Abhijit is saying. For your understanding, the entry barrier for defense is the ability to get certified by DGQA and the professional directorates of the concerned service, right?
Okay.
Every equipment that comes into defense has to meet DEFSTAN or military specifications. Now that's a cumbersome job, and not everybody actually manufactures equipment which is to mill specs, because it is an extremely higher grade of equipment manufacture.
Okay.
After that, to qualify, and then to qualify from different directorates, like Mr. Chowji just mentioned, because there are 3 different directorates who look after our product. The Directorate of Marine Engineering looks after the AC and ref. The Directorate of Naval Architecture, which actually looks after structures, looks after the HVAC, and the Directorate of Electrical Engineering looks after electrical aspects. Now, each of these 3 directorates evaluates a firm for its scope, right? So in our case, they have evaluated us and cleared us, and therefore we are part of the vendor list for all 3 equipment.
Okay. Nice of you. One more thing, in the month of March, we have entered into an agreement with the Dunfloss USA for some servicing in India. So how big that opportunity, and what is the potential from that segment?
Okay.
Let me. Harish, first of all, thank you so much. It is our duty actually to inform and to put this into a presentation. Somehow I missed it. And really thank you for bringing in this on in this gathering. Okay, what is this tie-up is that we are the only authorized service partner for the companies. Let's say tomorrow, for the sake of taking some name, I'm taking a name of Daikin. If tomorrow Daikin makes a chiller, if they find some problem in that particular compressor, and this is nothing to do with defense segment, it has nothing to do with only data center. The compressor is used for, let's say, pharmaceutical industry. But if there's a problem, we will be the authorized service station for it. So for
Okay.
any oil-free compressor for it from which is supplied by Danfoss, for servicing it will come to us.
But what is the total area in India? That means how much
Okay. Okay,
here they have
Harish,
installed this.
I just want to tell you that we are not looking at very high revenue from this particular service agreement at this point in time. Because the total
Okay.
population of these compressors is somewhere around 1200, 1300 odd.
Okay.
What this is actually is a strategic investment. It's a strategic tie-up and it's a capability building uh, uh, step that we have taken. Danfoss, it's called Turbo Core Authorized Service Partner, TASP, because this is specifically for mag bearing compressors or oil free compressors, which are manufactured by Danfoss Turbo Core. They do not have this kind of service arrangement, or they do not have a authorized service partner. There are very few globally. I think about three odd.
Hello. Hello. Hi.
Yeah, sir. Please continue.
Yeah. Hello. No
Abhijit ji?
response.
Sir, please go ahead and please ask the question.
You can go ahead and answer the question, sir.
Yeah.
So, Harish, like I was saying, this is.
Hello.
Sir, your voice is coming a bit distance. If you can come closer to the laptop.
Is that better now?
Yeah.
Are you able to hear now?
Yeah, perfect.
Okay. So,
Yeah.
Harish, like we were saying, the revenue that we are expecting from the authorized service partner setup that we've done is not
Okay.
significant today, but
Okay.
it's a strategic tie-up that we have done because
Okay.
we are expecting that as we grow forward and as the data center applications increase in number, there are going to be a large number of Danfoss compressors or oil-free compressors that will come into service.
Okay.
Therefore, our market in the future, we expect it to be large.
Okay. Okay. Okay.
And the most important thing is that the Navy, we have got all of them, a large number of these compressors, and therefore it's important that we develop the capability of supporting these compressors or these plants in-house, indigenously.
Okay. 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 Any roadmap or plan to get listed on main board of BSE and NSE?
Sir, I think if my memory serves me right, we are not allowed to go to main board for another 2 years at least, almost another 2 years. And we definitely plan to move to main board as and when it is available, as and when the window is available to us.
Thank you, Mr. Harish. We'll take the next question from the line of Jaideep Rupani. Mr. Jaideep, you can go ahead, please. Hello, Mr. Jaideep.
Hello. Can I get another question, please?
I think we'll move to the next participant. There is some problem with the line. We'll take the next question from the line of Srinatha Panduranga. Mr. Srinatha, you can unmute and go ahead, please.
Hello, can you hear me?
Yes, sir, very much.
Yeah, so first of all, thanks a lot for great set of numbers and explanation. I'm calling from Mangalore. So, and my question is, do we have any plans for export market other than India?
Sure, sir, definitely.
Yes, we do have plans, Sridhar, for entering the export market. Plans are at a nascent stage. There are certain discussions. I wouldn't like to elaborate too much on it. I would not like to elaborate too much on it, but yes, we have our eyes open for the export market.
Okay. My second question is, do we have any plans to increase the operating margin? Because I see from 24, it is reducing from 31, 27, and 21%. Whether it will be increasing as the year goes on?
So what we last year the 27% EBITDA margin we have achieved. This year it has moderated to 21%. So reason for this was mainly due to lower spares and service revenue. Going forward, we are continuously working on it to increase our spares and service revenue to 15 to 20%. So once it happens, EBITDA margin will always go up.
Okay. My last question will be for data centers. So, in one of the commentary, you said any cooling system, whether it will be air cooling or liquid cooling, the chiller market will be there for Shree refrigerators. So, when we consider the complete data center setup, what is the percentage of market for a chiller? What is the percentage? I mean, 1%, 2% of the complete data center setup?
See, when you look at a data center, there are 6 or 7 layers of data center, right? There's an EPC, there's a power generation and storage, there's a transmission, there's a cooling, there's a chip manufacturer. So there is large number of segmentations which go into a data center. As far as the pure cooling is concerned, it's roughly about 12 to 13% of a project, of a data center project. Right now, if you want to translate that into a number, purely for the existing data centers which are being executed today, the market is at 2.99 billion, which is expected to grow to almost 9 billion over the next 3 years. So only the data center cooling market, the cooling segment of the entire data center, is expected to grow at about a 25 to 30% CAGR over the next 3 to 5 years.
Thank you. We'll take the next question from the line of Nupur Karnani. Mr. Nupur, you can unmute and go ahead, please.
So, firstly, I would like to congratulate the management on good set of numbers. So my first question is that apart from the order book that we currently have, as on 31st March, it was somewhere around 270 CR. So how many projects have we bid for as on date, and how many we are L1 bidder? And does the current project, how does the current project pipeline look like?
Hello.
Are we audible now?
Yes,
Yeah,
sir.
just a moment. Let me restart the recording.
Parallel tracks. There are 2 parallel tracks of the way we supply. One is for new builds, and the second is for retrofits. That is, as a platform in the Navy grows older, its equipment and sensors, etc., are periodically renewed. So you have 2 distinct streams or 2 distinct methodologies in which equipment is supplied. As far as the new builds are concerned, that's the only place where we lost a few tenders. As far as the retrofits are concerned, as of now, the hit rate is very close to 100%. And going forward, we expect it to remain that way.
Nupur, are you done with the question?
Hi.
Nupur, thank you for your
Am I
good words as well.
Yeah. So shall I repeat my question, or
Oh,
I believe
did the answer not come through to you?
no, I believe the second
Right.
part, I believe that was not
What
communicated
was
properly.
sorry? What was the second part?
So it was with respect to the financials. So there is one line item that is other current assets. So other current assets just went up from 3.02 CR to 19.94 CR. So, what led to this increase by 6x? That was the second part.
Oh yeah, we didn't hear that question, but yes, we'll answer that as well.
So the rise in other current asset is mainly due to advances given to the suppliers, and some part is related to GA balances with the GST department. What happens is we buy the material at 18% input GST. At the same time, we supply the material to shipyard for warships at 5% GST rate. So the GST amount is lying with the government, which it will come down once we apply for the refund of input tax credit. It will definitely come down in first half of this year.
Understood. So that was from my side. Good luck to the management. Thank you.
Thank you so much.
Thank you, Nupur.
Thank you, Nupur. We'll take the next question from the line of Keshav Harlaka. Mr. Keshav, you can unmute and go ahead, please.
Hi. Thank you so much, Ravalnath Shinde sir and team, for giving us an excellent set of numbers and delivering and more than delivering on what you promised. So we've grown not 40% CAGR but 50% CAGR this year. So this is an
Thank
excellent
you.
set of numbers. So the
Thank
first
you. That's
comment
really
is on so first comment on seeing the numbers is the working capital cycle has improved from 570 days to 370 days. So can you give your comment on what this year what we could expect in terms of working cycle improvement from 370 days? Where are we going now?
I was under impression, last earning call, everybody, every question was on 570 days. I thought that we have improved now, there will not be any more questions.
This is a well
But
done.
you are just like as my boss, asking more improvement. Anyhow, sir, but let me assure you, the improvement will continue going happening. Number,
Okay.
I will come back to you.
Okay, got it. So second
Thank you.
question is, yes, sir.
Yeah.
Yes, sir. Sir, amazing. Sir, 570 to 370 means we are like a 30% down in working capital cycle days, which is amazing, sir. Just in a space of 1 year. That is really, really very good work. So second question is, there is a lot of volatility in commodity prices. So do we have a commodity price volatility inbuilt when we take orders when we are bidding for orders? Is our order having key, if there's a price volatility that will get factored in when we are billing you to the client? Do we have that inbuilt, or is it
Keshavji,
affecting our margins?
Keshavji, when we when we bid a project, and if the project is for going to happen for a couple of years, we definitely consider inflation, commodity price rise into our bid. But there is a limit to
Noted.
it, what we can think
Okay.
about it. So the commodity price rise which has happened, unprecedented commodity price rise which is happening right now, will have a small impact on us. And that impact is seen in EBITDA margins also going forward.
Got it. Got it, sir. Just two more questions, very short and fast. The third one is we have entered into data center cooling. So, what could be the contribution of data center cooling going forward? That is question number one. Question number two is we have guided for a 40% CAGR for the next 3 to 5 years in the current presentation. And in the last presentation, we've guided for 1,000 crore sales and 120 to 130 crores PAT for FY 30-31. So can you comment on these two numbers, sir?
My first comment will be, we are still
Sir, we are not able to hear you. Sauji, sir? Hello?
hear us?
Yeah, we are able to hear you now. Please continue.
Yeah. Well, I don't know whether my answer was recorded or my answer was heard or not.
No, sir. You will have to repeat it.
Okay. I said we will stand by the number which is what has been mentioned by us. definitely. And I also answered about a data center, saying that the data center this year we are looking for a reference kind of installation. So not no addition to the top line or bottom line. Data center revenue will start trickling in from next year onward, FY28 onward, not in 27. Is this audible?
Yes, yes, you're audible, sir. Please continue. You can keep your
I'm saying
camera off and
this is
continue.
my. Oh, I have done my answer. I don't know whether.
Yeah, yeah, okay. We'll take the
Sure.
next question from Mohit
Yeah.
Motwani. Mohit, you can go ahead, please.
Hello. Hi. Thank you for the opportunity. On two questions on data center piece. You spoke about the revenues, which you are anticipating in FY28 majorly. Are you baking this in your 40% revenue guidance, or this is out of that, that this will be out, above that?
I am saying that there will not be any revenue which we are considered from a data center in FY27. So our guidance for FY27 is without data center.
Okay. And in terms of, have you started any initial conversation with potential customers? And in that, can you give us a color of the competitive landscape which is there, and how many players are there who you are competing with? And probably you are expecting orders to come through by end of the year, because of which you'll be, having these revenues in FY28. Should we think about it that way? And also, you mentioned about exports, that, this is very in nascent stages. So is this also for the data center piece, or this is to do with the defense, and the defense sector side?
Okay, the first part of our about a data center, how many players there are, whoever is data center also has a very high entry barriers. Your product has to be qualifying for that, and that's the reason we have done a tie-up with a smart DT. As of today, there are, let's say, worldwide there are 30 or 40 major player in a data center, and out of which probably almost 70% is already present in India. So there are enough players, but the market size is also so big. Every single player today is probably booked at almost their 100% capacity level. So, getting a business out of data center, if our product is approved, if we are able to make it very clear, will not be a issue. About export, as of today, currently we are thinking about an exporting of a non-marine business or a non-naval business. Sorry, nothing about a data center.
It's in the marine segment. The exports are looking at the marine segment.
Thank you. We'll take one last question from Mr. Om Keshani. Mr. Om, you can unmute and go ahead, please.
Hello, sir. Good afternoon.
Good afternoon.
I want to some clarification regarding the long-term financial roadmap said earlier by the company in November 2025 PPT. So you said that 1,000 crore revenue and around 120 PAT, and currently you are saying that you are doing 40% CAGR for 4 to 5 years. So if we calculate, then it can be around 800 crore in 2030 or 31. So how would you answer that?
Okay. Mr. Om, the answer itself is lies in my this year's results, sir. We did give you a kind of a guidance, and we did deliver you something. So it's a mathematical calculation which we are doing. If you grow it by exactly 40%, you will end up in doing 833 crore rupees. But that doesn't work in business, sir. So what, as a management of this company, we definitely are standing by our word. The 1,000 crore is the guidance which we are given in the next 5 years, and it will happen, sir.
Thank you. We'll take one question from Mr. Palash Kawali. Mr. Palash, you can unmute and go ahead, please.
Yes, sir. Thank you for the opportunity. Hope I am audible.
Yes, sir. Very much.
First of all, congratulations for a good set of results. So my question is, would you be needing any external fundraising for this guidance that you have given, 40-50% CAGR for next 4 to 5 years, or internal accruals would be enough to achieve that kind of number?
So we are continuously working on a reducing of working capital days. Going forward for the growth aspiration that we are looking, major requirement will be for working capital only. So whatever the new working capital requirement will be funded by internal accruals and bank funding. If we look at our balance sheet, the balance sheet is not leveraged, and we can easily raise the required funds for working capital side.
Thank you.
As a trade channel,
Yeah. Yeah, we'll take one a question from Kaustubh Yole. Mr. Kaustubh, you can unmute and go ahead, please.
Hi, sir. Congratulations on delivering great set of numbers. So my question is, your FY26 revenue was 153 crores. Okay. So roughly it comes from 37,000 square feet of manufacturing space, implying revenue of 41,000 per square feet. So the greenfield adds 50,000 square feet to 1,000 expandable. So how does management expect this similar revenue intensity per square feet?
So two things, you yourself answered. When we have a 37,000 square feet of existing facility, out of which we are 20,000 is a lease facility which we are closing in the month of June. So we will have an overall 80,000 square feet of a manufacturing facility, correct? So and which is expandable for another 50,000. In 80,000 square feet of a manufacturing facility, it is just not, you just cannot do a mathematical calculation. What we did in which we.
So, Kaustav, just to put a simple thing, it's not a linear kind of a correlation. What is going to happen is that there are a large number of things which are coming in our new facility which backward integrate certain processes that we presently have partners who do it externally. So what this facility is going to do is going to improve our throughput. We are going to be able to actually ramp up the delivery cycles and hopefully be able to compress the working days even further.
Okay, perfect, sir. Got it. Sir, and lastly, I would like to just concur with the earlier suggestions by another analyst regarding the quarterly business update, as it would help us track execution and order inflows better way.
Yes, noted. Agastya said it along with you. We take your feedback, take it well, and hopefully we'll give you the commentary that is required as you require.
And in terms of the new order intake, we are regularly pushing it to the BSC channel as LODR.
Thank you. We'll take one last question from Mr. Om. Mr. Om, you can unmute and go ahead, please. Hello, Mr. Om, are you there? I think.
Hello, am I audible?
Yes, sir.
Hi. So basically, what I wanted to know was regarding the indigenization. I wanted to know, like, are we fully indigenized on a product basis, or still are we semi-indigenized, or how is the percentage breakup?
So as far as the Government of India norms is concerned for indigenous development, we are more than compliant. So in that context, we are a completely indigenous manufacturing unit. That does not mean that we do not import or certain raw material. That is always going to be there. So it's not going to be 100% indigenously manufactured. In fact, it is 100% indigenously manufactured, but there is certain amount of raw material which is imported, and that will always remain.
Thank you. So this was the last question for the day. Would the management like to give any closing comment before we end this conference call?
Definitely, I'm grateful to Kaptify and all my investor friends here in this conference for asking some really well-studied, well-analyzed questions, and that improves the quality of communication between the investor community and Shree Refrigeration. Thanks for giving us such an opportunity. Absolutely grateful for your kind words regarding the financial performance of the last year, and on behalf of my team, will promise you a consistent performance or even improved performance, primarily because of the kind of industry expansion that is going to happen as a vision of Amrit Kaal by our Honorable Prime Minister, growing the country from higher up in the global chain of rich countries, of biggest economies. We are at the right moment, at the right place, with the right infrastructure, right technology, taking benefit of naval expansion, marine expansion, data center. I won't say expansion, I would call it explosion. And this gives a great opportunity for a company that was an early entrant as back as 6-8 years ago to become a market leader in the naval segment. We continue to do or expand that success parallelly onto the land-based application.
I just want to add on to what Mr. Shendya just said. I would actually, I don't know, Vinay, if you're able to go to the slide of our vision mission, that is the third slide probably.
So you can continue since we are at the fag end of the presentation.
Okay, so we are not able to see that, but all I wanted to highlight to all the investors what our CMD Mr. Shende just said is enshrined in our vision, and that is completely aligned with the vision that our government has to be or to build a stronger nation with indigenous products and cooling solutions.
Absolutely great for highlighting that, Kaushik sir. Vinay, can we call it a day?
Yeah, thank you, sir. Thank you to the management team for giving us the time. Thank you to all the participants for joining us on the call. This brings us to the end of today's conference call. You may all disconnect now. Thank you.
Thank you so much. Bye bye, everyone.
Thank you, Vinay sir.